Hello, and thank you for stopping by Less is More, where we talk about your personal credit, business credit, travel, and life in general. Please don't forget to like and subscribe to my channel so you don't miss out on the next videos. I'm getting you all informed right now on the credit basics before we actually hit it hard with your personal credit. I will be walking you through fixing and improving your personal credit. And I would definitely would like everybody to be here on that journey with me. So stay tuned and don't forget to turn on your notifications so you don't miss out as well. Also, if you have any suggestions on videos I can make for you, please add those in the comments and I will do my best in honoring your requests. So without further ado or any delay, let's get started on the credit terms, jargon, and lingo part 2. Thus. Here we go. First term coming up is going to be Checks Systems. Checks Systems is a consumer credit reporting agency that tracks your activity related to closed checking, savings, and other deposit accounts at banks and credit unions. And if you've ever had any issues with a deposit account, such as a bounce or return check, more than likely, and it's possible that you might have a check system profile. Our next word is going to be FTCPA, also known as Fair Debt Collection Practices Act. And what this act does, it basically prohibits debt collectors from using abusive, unfair, or deceptive practices to collect from you. So this is important that you get to know this act because it may be your best friend when it comes to collection agencies. We are definitely going to be discussing this when it comes to debt collections that you have posted onto your personal credit report, and you have these debt collectors calling you late at night and harassing you and stuff like that. This is when this law comes into, well, not law, this is when this act comes to play, and we will definitely be discussing that one a little bit more later on as we continue our journey of fixing your personal credit. Our next word that we have, it's going to be the Consumer Financial Protection Bureau, the CFPB. Again, just like the previous act, this one is the actual agency of the U.S. government, and they're responsible for protecting your consumer rights and making sure banks, lenders, and other financial companies are treating you fairly. They basically hold companies accountable for illegal practices, and they make sure consumers' voices are heard. You can actually file a complaint with them, and when you feel your rights have been violated, and what this does is they will assist you with getting it resolved or removed from your credit report. And again, this is another one that we're going to touch up on a little bit more in depth as we venture into fixing your personal credit. Next word that we're going to discuss here is going to be Federal Trade Commission. As the word states, the commission is definitely an independent agency of the U.S. government, and their main mission is the promotion of consumer protection and elimination and prevention of anti-competitive business practices such as coercive monopoly. Their mission basically is to protect consumers against fraudulent, unfair, and deceptive practices, and they collect complaints, and they actually conduct investigations to companies and people that violate the law. I am actually in their news feed, and I see a lot of different things that they're working on. Things like this Credit Karma stuff that came out about these pre-approvals that people were applying for, and in fact they were never getting approved, and it was just a scam. FTC was definitely involved in that, so they're definitely here for us, the people. The next word that we will be discussing is going to be a Fintech. I don't know if you've heard of what Fintech is, but it basically is an acronym for financial technology. And it's basically a catch-all term referring to software, mobile applications, and any other technology created to improve and automate traditional forms of finances for business and consumers alike. Fintech can include anything from a straightforward mobile app, such as PayPal, such as Zelle, or it could be a credit card that basically doesn't even have a actual bank, such as Bank of America is affiliated Bank of America credit card is affiliated with Bank of America. You have this one called Petal. You have this one, this Apple. They're just not affiliated with a large bank, so therefore they're considered more of a fintech, and they call it, oh, this is a fintech card. So just again, this is just familiarization with the terms you may or may not hear while we're working through this whole personal credit repair here. Next word we're going to talk about is the statute of limitations. The statute of limitations is something that you're also going to hear a lot of when we start discussing personal credits, because what this means is that this is when a debt typically falls within a 3 to 6 years, although some periods can go as far as 15 years. The statute of limitations varies based on where you live, where the debt was taken out at, or where the main office for the debt company that you're involved with. In some states, the statute of limitation clock starts ticking when you fail to make a scheduled payment on a debt, and a statute of limitation is a limited period of time where a creditor or debt collector have to file a lawsuit to recover a debt. Again, this is important for you to know, so when we actually start delving into the personal credit report and we start looking at some debts that you may have that may be actually very old, we might be able to get those off of there quickly because their statute of limitation may have passed, and these debt collectors may be just trying to re-age your accounts. Again, we're going to discuss all of this later on as we get deeper into the personal credit repair process. Our next word is a word that you all have heard before: FICO Score, credit score. FICO Score, credit score. You hear this all the time, and it's a 3-digit number, typically between the range of 300 to 850. And what this does, it tells lenders how likely a consumer is to repay borrowed money based on the credit history. That's all a credit score is. Next word is Vantage Score. Vantage Score is the new FICO Score, the new credit score. It was founded in 2006 by the main three bureaus, Equifax, Experian, and TransUnion, and they're trying to do an alternative to the FICO Score. Their goal was to give consumers, more like college students and new immigrants, the ability to have a credit score. So it's very similar to FICO. Vantage scores, range from 300 to 850, but they classified each range differently. I will discuss the Vantage score a little bit more in depth in another video, because Vantage Score has a lot of different ramifications, sort of like the FICO Score with the FICO 8, FICO 10, FICO 3. Again, we will go into depth into that in other videos. Right now, what I wanted you to get to know is that there's a FICO Score, credit score, and there's a Vantage Score. Okay, so let's just continue with these terms. A soft pull or a soft inquiry. I know you've heard people say it's a soft pull, it's a soft inquiry. Well, what is that? A soft pull or soft inquiry is basically an inquiry into your credit report, and it's initiated by a company, by you or by a company. When it's initiated by you is when you go onto Credit Karma and you pull your credit report to see how you're doing, or it's initiated by you if you actually you're paying for a credit monitoring system and you want to check your credit score. That's a soft pull for you. When it's for a company, basically it could be when you're trying to do a pre-approval for a financing offer or a background check. And the good news is that a soft inquiry does not affect your all-important credit score. So it's just, basically a soft pull, meaning that they're just checking to see over the top to see if you kind of pre-qualify. It's sort of like a pre-qualification type thing. But again, it's a soft pull, and it doesn't affect your credit in general. Next term we have here is going to be, of course, the hard pull. Okay, the hard inquiry or hard pull is when you actually apply for a new line of credit, such as a credit card, a loan, mortgage, and it means that a creditor has requested to look at your credit file to determine how much risk you pose as a borrower. Hard inquiries show up on your credit report, and they definitely will affect your credit score. So it's important to understand that when they happen, how they will impact you, and why it's best to keep them at a minimum. Okay, you don't want to have a lot of inquiries on your credit report. When I go into a little bit further deep dive into the actual what is a FICO score and what are the different things that give you that perfect FICO score, we will definitely talk about inquiries as well. Next one is a credit freeze. A credit freeze is something that will restrict your access to your credit reports. And I definitely recommend that once your credit is fixed and we're done doing everything that we need to do and you're content with your credit score, I would definitely recommend that you freeze your credit. I say freeze because they're free. You go to the main three, Experian, Equifax, and TransUnion, and you basically put in a freeze on there. You could put it temporarily, you could put it permanently until you unlock it. A credit lock is a little bit different, and they are offered as part of the expanded paid services for these credit monitoring services. I wouldn't recommend the credit lock. Definitely recommend the credit freeze. I have it on all about 3 of mine. Next, charge-off. Charge-off means a lender or creditor has written the account off as a loss, and the account is closed for future charges. It may be sold to a debt collector or transferred to a collection agency. You are still legally obligated to pay that debt, okay, as long as it's within the statute of limitations. Again, we will definitely talk about all of this. I just want you to know what a charge-off is. Charge-off basically is you have a credit card for Victoria's Secret, you stop paying on it, you owe $300, it's been a year or two, you haven't paid anything on it, Victoria's Secret just writes it off as a charge-off, okay? That's all there is to know about a charge-off. Next one is authorized users. Authorized users are going to be very important for you to know because they will definitely be something that you might want to look into when it comes to getting onto the journey of reestablishing great credit. An authorized user is someone who's been granted access to use another cardholder's account. Adding an authorized user may help them build their credit and learn about using a credit card responsibly. Again, an authorized user is not legally responsible for the charges they add to the account, unlike a co-signer or someone on a joint account. But adding an authorized user can affect things like payment history and credit utilization, which might impact both parties' credit scores. So it's important to know that if somebody adds you as an authorized user, basically if they default on the card, it's going to affect your credit. But if they do great, it's going to improve your credit. So it's a good thing to use as long as you use it the right way. Next word that I'm going to definitely discuss is called leverage. And I bring this up because later on, as we fix our personal credit and we delve into the business credit, it's important that you are able to understand the term leverage. And what it is just the use of borrowed money, debt, to finance the purchase of assets with the expectation that the income or capital gain from the new asset will exceed the cost of borrowing. Basically, you're going to be leveraging one to do the other. And again, we will discuss this as we get further into the different videos from personal credit and we hop over to business credit. And don't forget to like and subscribe. Thank you for watching and see you next time. Bye.